that brings the question, which is, so what do we do as investors? Where do we look to? You painted a picture there, which, I've got to say, scares the bejeebies out of us.
Yeah.
However, having said all that, you've got a view, obviously, about where the capital growth is going to be. What are we going to look for?
Okay.
And before you go there so should I be selling my bank shares?
Look, they're fine. When I talk to investors and say, so again, our bank shares going to fall apart, I don't think they're going to fall apart, but you're not going to get any capital growth. You're probably going to give some growth. You're going to get some negative growth because the profits, I think, are going to struggle, and the dividend yield's going to be lower. Now, banks are still on good yields. They're fully franked. I think they're all largely fully franked these days. So investors say, well, look, I get a 5% dividend and I get an imputation credit, so it's still a good deal. While ever you think you can get 8%, it's a good deal. But if you lose 10% of your capital, which is where you need to be a little bit careful, then an 8% yield is not such a good outcome. So you should be investing thinking about yield. Don't go looking for any growth in them because you're not going to get any growth. And I think the profits are going to come back a bit. And I think what I'm trying to say today too is, and interestingly, I spoke on these topics at some overseas conferences at the beginning of August when the dollar was at 94 cents. And the guy who presented with me kind of twisted my ear afterwards, and he told me it was all rubbish and it was impossible that we're going to have GDP growth and no wage increases and the dollar was going to go down, etc. And he did send me an email this week and say, look, I do owe you lunch, so tell me when you're free and I'll buy you a lunch. And we're at 86 cents today. We are at an inflection point. And I'm not suggesting that people, for a second, dump everything that they're doing and go and do a whole bunch of new things, but you've got to start moving. You can't stay where you've been. And I think just like, property prices, because when we started this cycle, property prices were pretty bad back in 93. Pretty crappy. Commercial property was pretty terrible in 93 and, the recession we had to have and everything else. And so what I'm trying to encourage people to do is start to think outside of that three-trick show, which is residential property, bank shares and term deposits.
But I would argue term deposits should go up.
Term deposits will go up, but you'll find that if banks are lending less, term deposits will not go up as much because I think what you can get 12 months these days at 3.6, something like that. Is that about right? Yeah. So it's kind of 1.1% above the official rate. If the banks aren't lending as much, which is what my hypothesis is, they're not going to be scrambling as much for term deposits. So term deposits won't capture all of the interest rate upside, but they should still be there, right? They're still a decent investment. Bank shares are still a good investment. But if you lumber yourself just with residential property and bank shares are a proxy for residential property. And when you add your own home to it, so if you've got your own home and investment property and bank shares, they're all based on residential property. Now, when you think about diversification, for me, that is not diversification. And when you invest in Australia, the problem with Australia is, and I spoke about iron ore prices, 65% of the value of the Australian share market is the banks, AMP and the big miners. Right? We don't have any diversification in our share market. So investors tend to be exposed to one thing and our house prices are too expensive. So at this point, what I try to encourage people to do is think about the things that you haven't been doing and look for opportunities. If you like property in Australia, think about commercial property rather than residential property. Yeah. Because commercial property, when I speak to investors and I say, talk to me about your residential property, what kind of yield do you get? I say, I get 3.5% after I pay agent fees and rates and expenses. I say, really? Why would you buy something with a 3.5% return? And they said, I buy it for the capital growth. And I said, well, what if you don't get any capital growth? How does it look then? And I said, well, it doesn't look as good as it did. But you can buy commercial property in all sorts of areas. So retail, because of what we do as a group, we have a healthcare property trust. Where's Mark? Mark, what's healthcare property yielding at the moment?
About 7.5.
About 7.5. Plus you get tax deferred elements on that, which you will on new homes as well. You get a tax deferred element, and there's generally fixed annual CPI increases on on the rent. So either your income goes up or the value goes up, which is another 2 or 3%. And it's not just us. You know, there's good commercial property opportunities, whether it's retail, industrial, healthcare, office. If you look at that return versus what you get from residential property, being stuck in residential property on top of your own home doesn't really make that much sense if you're not getting good capital growth. And there's a lot of reasons why the capital growth, to be frank, is just not going to be there. The second thing is it's time to start investing offshore. And interestingly, for 20 years, when I speak to people about investing offshore, they say, no, that's risky. You know, they don't do it. And what I say to people is, well, can we go back and read it? And even recently, 20 years ago, they said it was risky. 10 years ago, they said it was risky. And 2 months ago, when I spoke to investors, they said, oh, it's still risky. And I said, well, explain to me why it's risky. And people think it's risky because of the currency. Because the currency can go up or down, and that can affect your result. That's absolutely true. But from where I sit, and I was having this discussion with people when the dollar was 8 cents higher, and I said, so let me talk about the Australian share market. We're 65% banks and miners. We've got no real diversification. So the Australian share market, for context, today I think we're about 1.6 trillion. The Asian share market, so I quite like Asia as a region, is about 10. So it's about 7 times bigger. And when you talk about and I must confess, about 2 years ago, because I talked to a lot of institutional investors as well. One institution I went and saw, a very big institution with a lot of money, and I was trying to get them to invest with us. And I said, look, why don't you guys put some money in Asia? And they said, I don't need to. I'm investing in mining companies, and they're a proxy for Asia, and therefore I don't need to worry about going offshore. And I went out of that meeting and I thought, oh, have I missed something? You know, is that a really good piece of information? So I went and had a look at the makeup of the Asian share market, and I also bring you back to the fact that the Australian share market's cluttered with commodity prices, mining stocks, that are affected by commodity prices. So when iron ore was $135, you know, that was great. Iron ore's 80, and everyone's ramping up production to try and compete, so the price is going to go lower. Firstly, is mining really a proxy for Asia? Because I can see mining shares going down 20%. And China's going to grow 7% next year. So if someone's telling me that is a proxy for that, it doesn't work. It's not true. The second thing is, when you think about share markets, if you look at the Australian share market, we're banks and miners, and very proudly so. But can someone tell me really important things that we use every day? So telecommunications is an area that interests me. Anyone want to tell me what Australia's biggest telecom stock is? Okay. Telecom. Telstra. So sorry, I'm old, right? I still call them telecom. So Telstra. Does anyone know what the second largest telecommunications stock is in Australia? Telecom New Zealand. Right? That's about it. And then we've got IINet, which is a net service provider, and there's basically nothing else. The telecommunications sector in Asia, for example, is bigger than the entire Australian share market. So if people want to tell me the Australian share market is a proxy for Asia, that is absolute rubbish. Telecommunications, all forms of technology, internet, fibre, etc., they're so ubiquitous. They're so much a part of life and only increasing. Yet we've got a share market that has basically no technology stocks and no communication stocks on it whatsoever. So when people say, I want to invest in Australia because it's not risky, I can't make sense out of that. I can't make sense out of a 24-year economic expansion that is ending. And it's going to end much quicker than I think people expect. And people tell me that investing in the US and Asia, for example, is risky because the currency does go up and down. So, commodity prices going from 135 to 80 is a bigger risk for me than the Australian dollar going from 85 to 90, for example, which I don't think will happen either. So other high-yielding investments, but not the same stuff that we've been using all the time. And what I say to people is start. You know, take 1 or 2% of your portfolio and pick some investments that you think you would be happy with and actually get to understand them the same way as you've learned everything you can about banks and residential property and term deposits for the last 20 years. It's time that we broaden that out.
So into commercial property?
Commercial property, I think, is a good one. You can get good commercial property, and the part of that income's tax deferred. There's depreciation allowances depending on which fund you go into. They're all different, obviously. And most commercial property has fixed either CPI or 2 to 3% annual rent increases. So you either get extra income every year or you get capital growth. That yield, to me, is a much better yield than residential property.